Welcome to the deep dive. In a world that's, well, increasingly digital, remote, and interconnected, cybersecurity isn't just some IT concern anymore. It's really the bedrock of modern business.
Absolutely. It's fundamental.
So today we're taking a deep analyst-style dive into one of the key architects shaping that security future, Zscaler Inc., ticker symbol ZS.
A major player in the cloud security space.
Exactly. Our mission here for you, the investor, is to cut through all the noise. We've synthesized, a whole stack of comprehensive sources, detailed company financials, operational data, market trends, competitive analysis, the works.
Right, trying to give you that informed breakdown.
We want to give you a truly informed breakdown of Zscaler. It's not just about what they do, it's about translating that into critical insights as what does it mean for their financial health, their market position, future prospects. Consider this your fast track to being really well informed without feeling, totally overwhelmed.
And a core insight, I think, is that Zscaler isn't just playing in modern cybersecurity. They're actively defining parts of it.
That's a great point. So let's start right there at the foundation. What exactly is Zscaler Inc?
Okay, so they're a clear leader in cloud security. They fundamentally help businesses secure access to applications and data, especially these really complex modern network environments.
And they talk a lot about zero trust. What's that about?
Ah, yes. The zero trust security model. This is absolutely foundational to understanding Zscaler. It's a complete paradigm shift from traditional security, the old castle and moat approach.
Right. Build walls, check people at the gate.
Exactly. Instead of trust, but verify. Once someone's inside the network, zero trust is all about never trust, always verify. It assumes no user, no device, nothing is inherently trustworthy, doesn't matter where it is.
So constant checking.
Constant verification for every single access request. And access is only granted to the specific resources needed for the shortest time possible. It's a revolution in how you think about defense.
Okay, that sounds like a pretty radical departure. How does Zscaler actually, bring this zero trust idea to life with their products?
Right, they have a core suite. The first big one is Zscaler Internet Access, or ZIA.
ZIA, got it.
Think of ZIA as your secure on-ramp to the entire internet. It routes all your internet traffic through Zscaler's global cloud.
Okay.
And in that cloud, security policies are enforced, threats get detected, blocked. It effectively combines things like firewalls, web gateways, sandboxing, all into one cloud service.
So consolidating a lot of traditional security tools.
Precisely. And making it cloud native. Then there's Zscaler Private Access, ZPA.
ZPA, for internal stuff.
Exactly. This is for secure access to your internal private applications. But crucially, it does this without needing traditional VPNs, which, frankly, can be pretty vulnerable.
Right. VPNs give broad access, often.
ZPA avoids that. It minimizes the attack surface by connecting users only to the specific apps they actually need. It's strictly on those zero trust principles. Very granular.
Okay, makes sense. And there was a third one.
Yes, Zscaler Digital Experience, or ZDX. This one's a bit different. It's about visibility. It helps companies monitor and troubleshoot the user experience. Figure out why an application might be slow or users are having connection problems.
So performance monitoring tied into the security platform.
Kind of, yeah.
Yeah.
It completes the picture. And what's really compelling is how well these products fit the market right now.
How so?
Well, think about it. The massive shift to remote work, hybrid work, the relentless move to the cloud for apps and data, the explosion of SaaS tools.
It's changed everything for network security.
Absolutely. It's created this urgent structural need for a totally new approach.
Yeah.
And Zscaler's advantages are built for this. Their cloud-native architecture means they can scale massively and update constantly. That's critical when threats evolve so fast.
And there's zero trust focus.
It's not just talk. They're recognized industry leaders there. Plus, they have this huge global infrastructure, over 150 data centers worldwide. That matters for performance.
So, summing up this part, Zscaler is positioned right in the middle of a high-growth market, really leading this major zero-trust trend. That's key for investors to grasp.
Definitely foundational.
All right, let's shift gears. Let's unmask the numbers. Because no matter how cool the tech is, the financial health is what really matters for an investment.
Couldn't agree more.
And Zscaler, being a SaaS company, well, that means subscription revenue is king, right? Recurring revenue.
Exactly. And a key insight for their stability is that the vast majority, the lion's share of their revenue, comes from those ZIA and ZPA subscriptions.
Which means predictability.
Predictability, yes.
Yeah.
But also it creates this powerful flywheel. Stable recurring revenue lets them reinvest heavily in R&D. That improves the products, makes them stickier, reduces churn. It's a virtuous cycle.
And where's this revenue coming from geographically?
North America is still the biggest chunk, but you're seeing really solid, consistent growth in EMEA, Europe, Middle East, Africa, and also in APAC, Asia Pacific. So they're expanding globally quite effectively. There's also a smaller slice from professional services helping customers implement things.
Okay. What about the costs? What are they spending money on?
If you look at their cost structure, it's primarily R&D, research and development. That's where the innovation happens, followed pretty closely by sales and marketing, S&M. And then you have G&A, general and administrative.
That high sales and marketing spend. Typical for growth size, right? Focus on grabbing market share.
Absolutely. It signals the aggressive focus on customer acquisition, building out their footprint, which naturally leads us to profitability. Always a hot topic for growth investors.
Right, because they haven't always been GAAP profitable.
Correct. They did show losses in the past, largely due to those heavy investments in growth, building out infrastructure, sales teams, R&D. But, and this is crucial, they are non-GAAP profitable.
Explain that distinction again for listeners. Non-GAAP versus GAAP.
Sure. Non-GAAP profit excludes certain non-cash expenses, the big one usually being stock-based compensation. Tech companies use stock options heavily to attract talent, so non-GAAP gives a view of operational profitability without that big non-cash hit.
Okay, so operationally, they're making money.
Yes, and importantly, their GAAP profitability, the standard accounting profit, is steadily improving as they get bigger and achieve more scale. Plus, they consistently generate strong, positive operating cash flow.
Which means they can fund their own growth.
Largely, yes. They aren't heavily reliant on constantly raising external capital, and their balance sheet is very healthy. Low debt, high cash reserves. That gives them a lot of strategic flexibility.
Okay, good financial foundation. What about recent performance? What metrics should investors be tracking?
Well, historically, you've seen very high revenue growth rates. We also watch the trends in their non-GAAP operating and net income margins very closely, looking for expansion. And, of course, tracking that progress towards consistent GAAP profitability.
You mentioned SaaS metrics earlier.
Right. For SaaS, remaining performance obligations, or RPO, is super important. It shows you the amount of contracted revenue that hasn't been recognized yet. Gives you visibility into the future.
Future revenue locked in, essentially.
Exactly. We also track growth in new customers, especially those big ones. Customers spending over $1 million a year with them. That shows enterprise traction.
And their track record on earnings.
Historically, Zscaler has had a strong tendency to beat market expectations when they report earnings. Those earnings surprises are usually seen positively. And of course, everyone scrutinizes management's guidance for future quarters. What are they forecasting?
Okay, so lots to watch. When we're valuing a stock like Zscaler, what specific metrics are key?
For high-growth SaaS like this, the price-to-sales ratio, PSR, is very commonly used. You compare it to their peers, to their own history. How much are you paying for each dollar of revenue?
Because earnings might still be developing.
Precisely. Similar metrics like EV sales and EV/FCF, enterprise value to sales or free cash flow, are also vital. Enterprise value gives a fuller picture than just market cap because it includes debt and cash.
Right. The total value of the company.
Then you look at margin rates. Gross margin, operating margin. High margins suggest a strong business model, pricing power.
And you mentioned customer spending.
Yes, the net dollar retention rate, NDRR. This is a huge one for Zscaler. Their NDRR has been consistently very high. This tells you that existing customers aren't just staying, they're spending more over time, upselling, cross-selling. It shows the platform's value and stickiness.
That's a powerful indicator.
It really is. We also sometimes look at the rule of 40. It's a quick check for SaaS health. Revenue growth rate plus profit margin, usually free cash flow margin, should ideally be over 40%. Zscaler often meets this.
Okay, and dividends.
No dividends. Typical for a growth tech company like Zscaler. They reinvest everything back into the business to fuel more growth.
So the big takeaway here for investors, high growth potential, often reflected in a high valuation. But that high valuation also brings risk, right? Sensitivity to growth changes.
Exactly. High valuations bake in high expectations. If growth slows or the market sentiment shifts, these stocks can be volatile. It's definitely a double-edged sword.
All right, let's zoom out now. Beyond Zscaler itself, let's look at the wider cybersecurity sector. Their fate is obviously tied to these bigger trends.
Absolutely. And the growth drivers for this sector are, frankly, enormous and ongoing.
Like what specifically?
Well, you've got the continued acceleration of digital transformation. Every company is becoming a tech company. Cloud adoption isn't slowing down.
More stuff online means more stuff to protect.
Precisely. And the threats themselves are constantly evolving. Think ransomware, sophisticated supply chain attacks. The bad guys are getting smarter, forcing companies to invest more in defense.
Plus regulations.
Yes. Increasing regulations around data privacy, GDPR in Europe, CCPA in California, others emerging, are pushing companies to get serious about security. It's not just best practice, it's often legally required.
So within this growing market, what are the key trends shaping security right now?
Okay. Several big ones. First, that zero trust architecture, ZTA, we talked about. It's really moving from a concept to an industry standard. Companies are actively adopting it.
Zscaler's home turf?
Definitely. Second, the integration of SASE Secure Access Service Edge and SSE Security Service Edge. These frameworks combine networking and security in the cloud. Zscaler is a leader here too.
What else?
Third, the increasing role of AI and machine learning in security. Using AI for faster, smarter threat detection and response is becoming table stakes. And finally, the growing need for cloud workload security protecting the actual applications and data running in public clouds like AWS or Azure.
Lots of moving parts. What about competition? You mentioned Zscaler is a leader, but who else is in this fight?
Oh, it's an intense landscape. You've got legacy vendors, the traditional firewall guys trying hard to shift to the cloud. You've got newer specialized players popping up. And the big cloud providers themselves, Microsoft, Amazon, Google, are beefing up their own security offerings.
So a crowded field.
Very. But Zscaler's advantage remains its pure-play focus on cloud-native zero trust and its leadership in SaaS. They built for this era from the ground up.
And it's not just security trends, right? Broader IT shifts matter too.
Absolutely. The continuous growth of cloud computing overall, the faster pace of digital transformation, remote work becoming permanent for many.
A new normal.
Kind of, yeah. And the rise of the data economy, where data is incredibly valuable and needs strong protection. All these broader IT trends just keep fueling demand for what Zscaler offers.
Okay, let's talk macroeconomics. How do things like interest rates or inflation affect a company like Zscaler?
They definitely play a role. Interest rates, for instance. Higher rates tend to hurt growth stocks like Zscaler because they make future earnings less valuable today. Lower rates could be a tailwind.
Makes sense. Inflation.
Inflation can mean rising operating costs for Zscaler. And it might also make some businesses cautious about their overall IT spending, potentially slowing down deals.
What about the general economy, GDP growth?
Economic slowdowns can impact overall IT budgets, no doubt. But, and this is important, cybersecurity is increasingly seen as essential spending, not discretionary.
Like keeping the lights on.
Almost. It's becoming a cost of doing business securely. So while not totally immune, cybersecurity might be less sensitive to economic downturns than, say, spending on new laptops.
Interesting resilience there. Any other macro factors?
Currency fluctuations matter. For a global company like Zscaler, revenue earned abroad might be worth less when converted back to dollars if the dollar is strong. And geopolitical risks are a weird one. Increased cyber warfare could actually boost demand for security.
A grim silver lining.
Potentially. But it also creates market uncertainty, which investors generally don't like.
So the overall picture seems to be that Zscaler operates in a strong sector, fueled by long-term trends, and shows some resilience to macro shocks because security is seen as essential.
That's a fair summary, yes. The necessity aspect is a key part of the story.
Okay, now for the critical lens. Every investment carries risk. Let's dive deeper into the potential headwinds Zscaler faces. What should investors really be watching out for?
Right, this is crucial. A major point of focus right now is growth rate slowdown. The numbers show this. Growth was around 40% back in 2023, then over 30% in 2024. But the latest quarter, FY 2025 Q3, came in at 22.6%, and their full-year guidance is around 22.7%.
So growth is definitely moderating from those very high levels.
It is, and that connects directly to the second risk, high valuation. Zscaler still trades at a high price-to-sales ratio, often about 15x. That's significantly higher than many peers with similar current growth rates.
Meaning the market still expects strong future growth, and if that disappoints,
the stock could face significant pressure. There's less room for error when the valuation is rich. Then there's intense competition. We mentioned this, but it bears repeating.
Palo Alto Networks, CrowdStrike.
Exactly. Palo Alto Networks, PanW, CrowdStrike, CRWD, CyberArk, CYBR. These are formidable competitors, and they're not standing still. PanW and CRWD especially are pushing hard on things like agentic operations, using AI for more autonomous security. Zscaler needs to keep innovating fast.
What else? Economic factors?
Economic uncertainty definitely remains a risk. If companies get nervous about the economy, they might delay big IT projects or take longer to sign deals. That stretches out sales cycles and can impact Zscaler's revenue predictability.
And the profitability picture.
The GAAP profitability issue persists. While they're non-GAAP profitable, that GAAP net loss of CO3 cents per share last quarter highlights the ongoing heavy spending on R&D and sales and marketing. Investors want to see a clear path to sustained GAAP profit.
So balancing growth investment with bottom-line results.
It's that classic growth company tightrope. And finally, there's always technology evolution risk. Cybersecurity changes incredibly fast. What's cutting edge today might be obsolete tomorrow. They need to stay ahead of the curve. Think next-gen AI. Quantum computing's impact on encryption.
Okay, let's drill down on that competition again. You mentioned Palo Alto, CrowdStrike, CyberArk. What about others like Fortinet, Cisco, even Microsoft? How do they stack up?
Right, it's a broad field. Fortinet is strong with its integrated hardware-software approach, especially in certain market segments. Cisco has massive reach due to its dominance in networking gear. Microsoft is a giant, leveraging its Azure cloud and existing enterprise relationships to push its security offerings. Each has strengths.
So how does Zscaler continue to win deals against these big players? What are its core competitive advantages?
Well, first, that cloud-native architecture is still a fundamental differentiator, especially versus legacy players trying to adapt. They were built for the cloud era.
Less spec.
Exactly. Second, their unrivaled zero-trust leadership. That 4-year run leading Gartner's Magic Quadrant for Security Service Edge isn't just marketing. It reflects real technical strength and market execution. They scored top marks for ability to execute again in 2025.
That validation matters.
It does. Third, that massive global scale, the 150-plus data centers. That provides performance and reliability advantages that are hard for smaller players to match. And fourth, their AI and data advantage.
Tell me more about the AI part.
They process a huge amount of traffic data from over 50 million users. They use that data to train their AML models for better threat detection. Remember that 36x surge in enterprise AML tool usage reported by Threat Labs? Zscaler is positioned to secure that. They're launching specific tools, too, like AI Guard, to help companies safely use private AI models, like large language models.
Okay, so they're trying to leverage their data scale for AI leadership. Let's get a bit more technical on the platform itself, a Zero Trust Exchange. How does it actually inspect all that traffic?
Think of it as an intelligent switchboard in the cloud. Instead of users connecting directly to the internet or apps, all their traffic is proxied through Zscaler's closest data center.
Okay.
Inside that proxy, Zscaler performs deep packet inspection. It applies all the security engines we talked about, firewall, intrusion prevention, sandboxing, data loss prevention, DLP, in real time, in line, before the traffic goes anywhere else.
So it's not just routing, it's active inspection and enforcement.
Active, inline inspection and policy enforcement. That's key. ZIA does this for internet traffic. ZPA does it for private app access, replacing those risky VPNs. Remember, 92% of orgs worry about VPNs and 81% plan for zero trust. That's Zscaler's sweet spot.
And ZDX fits in how?
ZDX monitors the performance of that entire path, user device, network, Zscaler cloud, application to troubleshoot issues. AML is woven throughout, from threat detection to identifying performance anomalies. They're also constantly improving things like DLP, like better detection, using exact data match.
Seems like a tightly integrated platform. What about Zscaler's internal strengths? Management, R&D.
Absolutely critical. You have strong management with CEO Jay Chaudhry, a recognized pioneer in zero trust. He sets a clear vision, like the recent AI Guard push, that drives their R&D excellence. They reinvest a significant chunk of revenue back into R&D, leading to a rapid pace of innovation and new product features.
And their sales execution. There were some issues there previously.
Yes, they had some go-to-market hiccups back in 2024, but they seem to have addressed those. They've shown improved GTM execution lately, leading to better sales efficiency. They expect stronger growth in the second half of this fiscal year, helped by that large base of over 50 million users.
And financially, they're solid internally.
Very. That robust financial structure, over $3 billion in cash and short-term investments as of the end of April 2025, plus positive free cash flow gives them huge autonomy. They can fund R&D, make strategic acquisitions.
Like the Red Canary deal.
Exactly. The acquisition of Red Canary in May 2025 looks like a smart move to boost their AI capabilities in security operations, specifically around detection and response. And finally, for investors who care about ESG, Zscaler has made commitments. 100% renewable energy use since 2021, aiming for net zero on Scope 1 and 2 emissions by 2025.
Okay, let's pull this all together then. For you, the investor, what's the bottom line, the overall perspective on Zscaler?
Well, it's undeniably a compelling company. You have powerful structural growth drivers behind it, the shift to cloud, remote work, the absolute necessity of zero trust security.
So the opportunity factors are clear.
Yes, structural market growth, zero trust adoption, leading technology and brand, high customer retention, and that strong revenue expansion from existing customers, NDR. Those are the big positives.
But we have to balance that. What are the primary risks, again, summarized?
The key risks remain. Intensifying competition from well-funded rivals like Palo Alto and CrowdStrike. The potential impact of macroeconomic slowdowns on IT spending. That high valuation, especially with the recent growth slowdown to the low 20% range. And the ongoing pressure to reach consistent GAAP profitability.
So weighing those opportunities and risks, who is Zscaler really best suited for as an investment?
I'd say Zscaler fits best for long-term growth investors. Investors who really believe in the long runway for cloud security, who buy into the zero trust transition being fundamental, and who see Zscaler as a key technology leader capable of navigating the competition. You need patience and tolerance for volatility given the valuation.
Makes sense. And as always, our critical reminder for you, our listener, the investor, please always do your own homework. Verify this information. Check the latest SEC filings, the 10K annual reports, the 10Q quarterly reports, the 8K current reports. Listen to recent earnings calls. Read independent analyst reports.
Absolutely. Due diligence is key.
And critically, make sure any investment aligns with your personal financial goals, your timeline, and your individual tolerance for risk.
Well said.
So here's a final thought to leave you with. Think about this ongoing digital arms race. You have cyber threats constantly evolving, getting more sophisticated. And on the other side, you need security solutions like Zscaler's to be just as innovative, just as adaptive. How will this relentless back and forth continue to shape valuations in the cybersecurity sector? It's a dynamic that's not going away.
Definitely something to ponder. The value of defense in a constantly escalating conflict.
We encourage you to consider what aspects of Zscaler's story or the cybersecurity market overall resonate most with your own investment thinking. What stands out to you?
What's your thesis?
If this deep dive was helpful, please subscribe.